In this video, we're going to go over this problem and do cash flow from operations. Okay, so how do you go about doing this? So again, I would go to the handout and I would follow the steps, right? Cash flow from operations, we start with net income, add depreciation, amortization, minus any gains, add any losses, and look at the current assets. So the first thing we're going to look for is net income. When you scroll through all of this, here's net income right here for $200,000, and you'll need some place to add that up. I'm just going to use Excel. Then the next thing the handout says to do is look for depreciation, amortization, and depletion. When we look through this, there is no depreciation, amortization, or depletion. If there was, then we would need to add it. Then we look for any gains and losses. I look through here, I don't see any losses or gains. It would have to say something that losses and gains. And then I look for changes in current assets and current liabilities. If you don't remember what the current assets and liabilities are, here are the current assets, here are the current liabilities. So I look for current assets. If it's increases in current assets, I subtract. Decreases in current assets, I add. If it's increases in current liabilities, I add. If it's decreases in current liabilities, I subtract. Okay, so first, accounts receivable, that's a current asset. It increased. If a current asset increases, I subtract. So I am going to subtract by 3,000. So I'm going to put minus 3,000. Next, inventory is a current asset and it decreased. Decreases, I add. So I'm going to put positive 14,000. Then it has supplies increased. If it's increased, I subtract. So increased by 30,000, I'm going to put minus 30,000. And then now I'm going to look for current liabilities. Okay, these are the two current liabilities here: accounts payable and unearned revenue. Accounts payable increased by 33,000. What's the rule for current liabilities? Increases add, decreases subtract. So remember, if it's a current asset, you follow these rules. If it's a current liability, you follow these rules. Okay, so accounts payable increased by 33,000. So I'm going to put a positive 33,000. And unearned revenue decreased by 46,000. I'm going to put a negative 46,000. And I'm going to add it all up. And that gives me $168,000. And I will put in $168,000. And that's my answer. Okay?